It's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Hope you guys are doing fantastic and happy Friday. There's nothing like a little hot coffee here on these cold, cold days. Boy, was there a huge temperature swing. It was pretty volatile in terms of the temperature change that we experienced here this week. The good news is that volatility was not in stocks and mortgage-backed securities. Not a whole lot of volatility in the financial markets. We saw rates end this week basically unchanged from where they were, where they ended last week. Last Friday, I reported to you that we did see the jobs numbers come in, and that report caused mortgage-backed securities to rally a little bit. And I was wondering if it was going to continue into this week. It did not. So the rally basically stalled, and we saw just a pretty even keel week here in terms of the financial markets. It was a very light week in terms of economic data. We didn't see a whole lot of things released. The markets were closed on Tuesday for Veterans Day. But we did see retail sales come in today with a 0.3% increase, which was as expected. And on Thursday, we saw jobless claims, the weekly jobless claims come in, and it showed about 290,000 people filed for unemployment, which is an okay number. It really is not too high, not too low. It's an okay number, and that was really basically about it. But we are at an interesting level here because both mortgage-backed securities and the stock market are in a very tight trading range. There hasn't been a whole lot of volatility, despite, we saw some volatility in terms of temperature swings here this week, but and we have been experiencing some pretty huge volatility here in the financial markets, but that hasn't translated in the last couple of weeks, and especially in the last week. And I don't think that the volatility has hibernated here for the winter. We will continue to see it. It's just not right now. What happened on October 9th is that the stock market started a correction, and that only lasted about 3 trading days. And then the S&P 500 has gone on a torrid pace, and in a period of about a week and a half, it recovered everything that it had lost, and now we're setting new records. Well, over the last 3 days, the stock market has really done nothing. It has just remained at these levels, and again, that's not going to continue. So we're going to see one of two things happen. We're going to see the stock market continue to move higher, which would be tough on interest rates. That would cause pressure on interest rates, or we might see a break lower and another correction, or just at least a bit of a bounce back, and that would be helpful to interest rates. I think that's eventually is what's going to happen. The stock market has been doing great for quite some time. In fact, it's been 1,135 days since a 10% correction, which is the 4th longest streak in the last 50 years. Now, the longest one did go over 2,000 days. It was like 2,300 days. So it could continue a whole lot longer, but eventually there is going to be a correction, and that's going to help interest rates when that happens. But who knows what's going to happen until then and when that's actually going to happen. So I do think, though, it's kind of ripe for a correction here sometime. So I don't think that we're in a lot of danger of interest rates going dramatically higher, although there is some of that talk that the Federal Reserve will begin to increase rates in 2015, but we'll see what happens in the meantime. I still think things are going to remain quite well throughout the holidays and the first part of this year. So we'll let you know what happens next week. Thanks for joining me with Java with Jared. Hope you guys stay warm, and we'll talk to you soon, all right? Bye-bye.